The end of fintechs? Is it? Is it the end of Sofi, PayPal, Square, Upstart, Lending Club, and Robinhoods of the world, along with everything else fintech? Or is it a start of something new? Well, it depends on how you look at it. That's exactly what we are going to do today. I'll show you some facts and some stats that will show you the end and the beginning of something new. Well, I try my best with what I have to share, and my goal is always to present facts and stats to make my argument. So please comment below if you agree with me and why, and also comment below if you don't agree with me. And if you enjoy content like this, then please help the channel by giving it a thumbs up and also subscribing if you're not subscribed. And if you would like to chat one-on-one, then join our Discord and Patreon. Links are in the description below. So let me start this video by sharing some very common facts. So let's take a look at this chart together. So this is a chart of 4 fintechs. Of course, this is not an inclusive list. This is a list of 4 fintech that I picked to basically show you where we are right now. And as you can see, it's PayPal, Square or Block, Robinhood, and Sofi. Everything is down big. PayPal is down almost 17.63% for the year. This is year to date. Block is down almost 26% for the year, and Robinhood is down almost 50% for the year. I mean, this is really bloodshed for Robinhood right here. But Sofi is the only one that's up almost 20% for the year. I'm sure yours and mine portfolio doesn't feel like it, that we are up 20%. I wish if we were, but we are not up because we bought probably at higher price, and where Sofi, well, IPO was much lower, and right now Sofi is up 20% year to date. But the common theme is that all fintechs are down big time. Now, it's clear that in the last few months, we have taken out all the gains from some of the big names in the fintech world. And some are saying that it's the end of fintech. And for those companies, I mean, why wouldn't you say that? An argument can be made, especially after seeing the next chart. So take a look at this chart. I have shared this before in the past. I'm not going to spend too much time here. But quickly, this is the chart of fintech as a sector. And you can see over here, in January, February of 2021, we had the influx of money coming in. Well, it's kind of started in December. So this is November, December, January, February, and then March. Come March onwards, we have seen money go out of the sector for the whole year. People were taking money out of fintech sector, and they were of course investing in different sectors. We, or I would say you and I, probably didn't feel it because our favorite companies were doing good for a while, and that's why we were not feeling the pinch. But as a sector, the money was coming out of fintech sector. Now comes the interesting part, and the part that shows that this might be the start of something new. So let me share some information, and as a gentle reminder, please give this video a thumbs up to help this channel reach out to more investors. Okay, we are talking about an ETF. This is a Fintech ETF, just like Cathie Wood's ARK-F, but this is much smaller. When I say much smaller, this is still a $1.2 billion ETF, but ARK is about $41 billion. And ARK saw some big pullout in the last 3 to 4 weeks. We think that, but that's not the case. Take a look at the ARK's charts first. So this is ARK chart for the whole year, and I went back all the way to 2019, and as you can see over here, this is June of 2020. After that, the fintech or the money started to come into the fintech sector, and this was January, February, and you can see the huge influx of money in February that we got. Since February, the money has been going out of ARK-F's ETF fund right here. So this is all 2021 after March. We only had like 2 times. This is April and this was June when the money came in a little bit, but then majority of the money has flown out of ARK-F's ETF for the whole year. So the influx of money that we had was basically November, December, January, February, and then since then the money has been going out. This kind of correlates with what the chart that we see over here, where it's a lot of money that comes out or came in since January, and then after that, this is the January right here, and after that we have seen a decline, and after that in the fintech sector we have seen a decline. Okay, so now we had all these signs in front of us that folks are getting out of fintech after the crazy rush we saw in 2020, but no, not that fast, because now what I'm showing you will prove you that people are still invested, but they're investing more logically and more carefully. Take a look at this. This is an ETF that I was telling you about right here actually. This is called FinX or Fintech ETF from Global X, and this is the symbol. You can check it out yourself. The inception date was September 12th of 2016. Net assets, it's about 1.22 billion, and right now it's trading at about $42. Now this is these are the top 10 holding of this particular ETF. It has Intuit, Aiden, Finserv, Coinbase, Fidelity, Bill.com, Square, PayPal, and Zero. Okay, so all these funds right here, of course there are many more funds, but these are the top 10 funds for this ETF. Take a look at this chart. This is the same time frame as ARK's, and you can see this ETF has started gaining traction way before ARK, and it has attracted investors. The pullout that you see over here, the two pullout, this was actually 2020 when we had some pullout, but since then it has been going in. But what's interesting over here, look at this. The last part of 2020, the money started to come in again, and then we saw the peak in January, February, and March. After that, people started to take some of the money out, but look what happened. Starting October of this year, people started to put money back in, and even though the whole sector is really bad right now, we can still see this fund gaining some momentum. People took out money in May when we had that crash, they took out the money, but since then they have been piling money in the ETF. So when somebody says the whole sector is dead, I don't believe that. I feel people are more careful on what kind of companies they invest in. This particular fund does not hold Hood or any other speculative, or I would say more higher volatile stock. This fund, of course, holds a different subset of companies as ARK. ARK, of course, because of the name, because of Cathie Wood, has drawn more attention and people have taken money out. It's much bigger, but this was a smaller ETF. But this smaller ETF has seen a steady flow of money coming in, even though December was less. But of course, we are not done with December. And if you see the volume over here in December, people were taking money out because remember, in November we had a higher inflow of money as December. So people did take some money out right here. As you can see, this part right here, I'm going to actually highlight it. So right here, people still took some money out right in between there. But of course, they had better inflow of money. At least there was no outflow of money as we have seen with ARK. So this was a difference. This is the shift I'm talking about. People are being more careful, more logical in investing their money. They don't want to invest money in companies like Hood, those who are much in the news and doesn't have a very good name. They want to invest money more like in Bill.com or Intuit or PayPal or Block, those who have been around and are much bigger companies than Hood or Sofi, for example. They don't even hold Sofi, so is ARKF. ARKF doesn't hold Sofi, but ARKF holds Hood. They don't hold any Hood and any other companies or new fintechs. So they are basically focusing and concentrating on more stable companies that have real earnings and real profits. So I feel that companies like Sofi, those who have a great potential to be successful, are going to be fine. This is the time when it's really testing our patience, because I know it's going down every day and it's very hard to hold on to our investment. But as you can see over here, the sector is still alive. People are still putting money in. It's a matter of time before we see the rotation. It's going to be a while before people will feel comfortable. I'm not saying it's going to happen tomorrow, but what I'm saying is that people are much more careful now than they were back in 2020 because everything was touching the moon. So here's the rotation that I am seeing happening in front of us. The sector, of course, the fintech that I'm talking about here is ever so present, but taking a beating, of course, we know that. And I feel people are realizing that and deciding where they want to be for next year. I mean, do they really want to track the stock movement day by day, or are they fine investing in an index or an ETF and just have fun along the way? I mean, S&P just gave like 23 to 25% return for this year. We're not done with this year, but that's the kind of return you got from S&P. That's amazing. Do I want to put all my money in S&P and just sit back and relax? I feel it'll be a while before we see the actual rotation coming back in, and it'll be a while before folks started to feel confident again in these individual stocks like before. And that's why I keep saying that the option, especially short term and even leaps at this point, will get punished over time if we don't see massive volumes and a trend reversal soon. Just my opinion. I've shared my 2022 investing ideas in a video, and I'll link towards the end of this video, so do check it out and let me know in the comments what do you think about the fintech as a sector. And if you enjoy videos like these, then give me a thumbs up and consider subscribing if you think I provided some value. For one-on-one conversations, join our Discord and Patreon. Link are in the description below. As always, a pleasure to share all of this with you. Until next time, you all have a sparkling day.